Hello and welcome to today's Your Daily Five. I'm Tom Bowley, Chief Market Strategist at earningsbeats.com, and I'm happy to join you on this Wednesday, June 8th. Before I get into my five charts today, I want to take you over to earningsbeats.com. This is my home. You can go to earningsbeats.com and simply scroll down. We have a free newsletter. I'd love to have you join our community. This is a 3 times a week newsletter published Mondays, Wednesdays, and Fridays. Usually a pretty quick read, just a couple paragraphs in a chart, focusing on a lot of the things that are important to us here at Earnings Beats. So, of course, earnings reports. We like to look for gap ups, gap downs, look at how market trades after reports come out. Also, we look at candlesticks, relative strength, trend lines, moving averages, those types of things. We focus probably one of the few services that actually focuses on both fundamentals and technicals. So we look at the fundamentals for stocks that we're interested in entering, and then we use, technical analysis to actually find those entry points and exit points. All it takes, though, to join our newsletter to learn more about us is your name and email address. Hit that subscribe button, and we'll get you set up. One huge benefit being part of our community is we have free events from time to time, and we reach out to everyone on our EB Digest subscriber list when we have our free events. So we'll provide you room instructions and so forth to make it easy for you to come in and join, claim your seat to any of those free events. Anyhow, we'd love to have you, so make sure you go over to earningsbeats.com, scroll down, find this area, and check us out. Also, you might like our portfolios. We've had these in play now for close to 4 years, at least our model portfolio now more than 4 years, or almost 4 years. And you can see since inception how the model portfolio has done relative to the S&P 500 over that same period. So you can see 145% versus 55%. So significant outperformance. We're doing it again this quarter. You can check out all the other portfolios as well, but pretty proud of what we've been able to do over time relative to the S&P 500. So be sure to check that out as well. All right, so let's talk a little bit about the charts today. The focus for me today, and one of the things I've been focusing on here over the last few weeks, is trying to figure out a bottom in the market. I believe we're in a secular bull market, but in a cyclical bear market. So I think we're in a short-term bear market. I think that will end, and I think we will resume the long-term secular bull market that we've enjoyed. Some say since March 2009, because that was the bottom. I say since April 2013, because that's when we took out the S&P 500 tops from 2000 and 2007. So at that point, we break out. That confirms, instead of sideways or down action, it actually confirms the breakout and the start of what normally, from a grand super cycle standpoint, turns out to be about a 20-year bull market, secular bull market. So I think we've still got a number of years left in this secular bull market, but from time to time, you do go through these periods where you have cyclical bear markets. 1960s, there were 4 of them. 1980s and 90s had 2 or 3. So this isn't unusual to have a cyclical bear during a secular bull, and I think that's what we're in. So if I'm right, there are going to be some stocks that are bottoming or maybe have bottomed. And so I'm going to show you 5 today that I believe have bottomed. It's not that I don't think we couldn't go lower in the market. I just don't think these stocks are going to go lower. We'll see. First up, Zoom Video Communications. It's easy to use hindsight, and we can now look back and say, wow, Zoom at 600 was just crazy overvalued. But I think in another 6 months to a year, we're going to be saying the opposite, and how crazy undervalued Zoom was when it got down to $80. Think about what this world has gone through over the last 2 or 3 years and the transformation that it's made, just fundamentally. How many more people work from home and Zoom? I know there's competition out there. There's competition in everything. But Zoom's business is so much bigger, and their brand is so much bigger than it was 2 years ago, 2.5 years ago. And yet when we started the pandemic back in March of 2020, we were near $100. It was right around $100 stock. And here we are a little over 2 years later at 115. And just a few weeks ago back in, 80, 85. It just seems to me like we've gone way too far in the other direction. So I like Zoom. I like the fact that we've put in this lower low. First of all, I would have been looking for $100 to provide some pretty good support. We went just below that, bounced, and went one more, put in one more low. And seems to me like now we're beginning to rally. Previously, when we've taken out prior lows, we go back up and we test those lows, and then we go back down. This has been a little different here. We got to this low, we bounced, we went back through this low, but look at that really strong candle, and look at the volume to support that move to the upside. So I think Zoom's bottom is in. Now, if the market goes down one more time, sure, Zoom could maybe go back down below 100. I wouldn't be shocked by that. I just don't think we're going to go back down and set a new low. I believe the bottom is in here on Zoom. Next up, Bumble. This is one that I've passed along to our members at Earnings Beats recently, just as a short-term trade candidate. You can see on the way down, it made this final move down from about $30. This was a pretty straight drop from 30 down to, I don't know, maybe 16. We came back up very quickly. Look at all these hollow candles. Look at the heavy volume, right back to 30. We go back down again. Volume's mostly light, starts to pick up a little bit as we get near the bottom, close to filling this gap. And then look at what happens here again. 4 straight days, hollow candles, big volume. And now this time, after going up to 30, notice we came back down and we hit that 20-day moving average and bounced to a new high. That didn't happen last time. We went up and we came right back down through the 20. This time we go up to 30, we come back down, hit that 20-day moving average and bounce to a new high. This is more of a bottoming pattern to me. I like the volume that's been going in. Really like that PPO now that's strengthening here. Starting to show pretty good relative strength. We're at about a 5-6 month relative high versus software. And I think we can make a run for this relative resistance level right here. And then from there, we'll see what happens. But in the meantime, I believe we've seen a bottom in Bumble. Maybe we go a little bit sideways, watch that rising 20-day. That could be the area to keep in mind as we go forward. Next up, Amazon. Amazon was in sideways consolidation for quite a while. It had made a big run, went sideways for a while, and then pulled back. Now, recently had its 20-for-1 stock split. So now instead of talking about it at $2,500 or $3,000 or $2,200 or whatever, now it's $123. So much more affordable for many folks. I see volume coming in here off the bottom. Again, I see a lot of hollow candlesticks. I see a positive divergence, higher PPO with lower closes. Notice where I drew this line. It's from closing prices. And I'll show you in just a second how you can pull that up and see that a little bit clearer in just a second. But down here at the bottom, I just wanted to point out, normally what you would see is after a lot of relative sideways action and a big breakdown, normally we would come up and then just roll back over again at these prior lows. Here, we got up close, looked like we were rolling over, and then we had another surge. And this surge is coming on very heavy volume. So I really like the action that's taking place in Amazon. Here's the level I think we can get to. And then we might see some hesitation, especially if the market's weak over the summer, about that 130, 138 area. But I wanted to show you how you can see this positive divergence a little better. Candlesticks sometimes are difficult. If you put a line chart up, then you can see this low much easier. See how we put in lower closes, higher PPO. So we've got ourselves positive divergence. We're making our way back up toward the 50, which is what I would look for, a 50-day test, a PPO center line test. I think that takes us up into this red gap resistance range that I pointed out. Dropbox. Dropbox, I think, is another one looks good. Relative to software down here at the bottom, you can see, again, another stock that's gone to about a 6, 7, 8 month relative high. This channel, if you take the highs, connect them, drag the line down and connect these lows, pretty much the entire downtrend has been within this channel. Notice the last 3 days, we've broken out of the channel. PPOs turned positive. Volume came in on this break. We've been holding the 20-day moving average, which is different than what we were doing during this downtrend. So I think Dropbox has bottomed and is now turning higher. And then the last one I have for you today, Sprout Social. I wanted to find an internet stock because the group's been beaten down so badly. I wanted to find an internet stock that looked interesting to me. First thing I will just point out is look at all these big hollow candlesticks right here. A lot of them. And look at the volume picking up on this move. I think that Wall Street's accumulating some of these stocks already. I don't think it's showing up overall in growth stocks yet, which makes me think maybe we go a little bit lower. But I do think Wall Street's starting to pick its favorites. And Sprout Social, I think, is one of those. So it's in the internet space. You can see the AD line in the last month has really picked up. We just recently moved to about an 8-9 month high on the AD line. Relative strength is just beginning to pick up. I'd like to see it take out this double top from late March, early April. See if we can get that done. But overall, I really just like this volume, all these hollow candles, and just the fact that the stock appears to be accumulated in a rather big way. So those are my 5 stocks that I like for potential bottoms. I think bottoms are already in on these stocks. Again, doesn't mean we can't go down again one more time, especially if the market's weak, but I expect these 5 stocks to hold their lows. So again, that's Zoom, Bumble, Amazon, Dropbox, and Sprout Social. It was a pleasure joining you today on your Daily 5. Please remember to go to earningsbeats.com and sign up for our free EB Digest newsletter. You can just go right over here. Make sure you go to earningsbeats.com, scroll down, and there you have it. Everybody, have a great day. Happy trading.
Hey, Grayson Rose here with StockCharts. Thank you so much for watching. I hope you enjoyed that video. If you did, consider giving it a like down below, maybe leave us a comment, and if you're new to the channel, you can subscribe at the link up above. We're gonna bring you daily content from an incredible collection of technical analysts and financial experts.